Okay, good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update number 170 for Monday, 20th of January, 2025. I hope you're all well. I hope you've had a good weekend. I hope you're ready for what will be undoubtedly an eventful day, in an eventful week, in an eventful month, in an eventful year, I think. So great to have you all here in the room. Just want to check that the technology is working in our favour. If you're here in the Zoom room, and if you can just confirm that you can hear my voice and see the slides. We're also trying to live stream this through YouTube as well. If you're joining us through that medium, then fantastic. Great to have you here. As I said, hope you can see and hear what we are talking about today. Fabulous. Thank you. Thank you, Oliver. Nice to see you. Thank you. Great to have you here and everybody else here. For those of you just joining us for the first time, the Monday Market Update is literally just that. It is me flying through as much as I can cover in the next 25, 30 minutes, looking at strength and weakness within FX and indices markets, looking at some charts of interest, and then having a look at the live markets themselves. This is not a signal service. There's no trade recommendations. It's just me sharing with you what I'm looking at, which you might want to add to your own particular watch list. As always, you're always very welcome here, okay? But just remember that ultimately you are responsible for your own trading decisions. Those of you who want a little bit more educational, well, then we are restarting our Monday Market Matters webinars for active trades at 2 o'clock London time today. You can either register on their website or you can see the QR code there. Invariably, what we're going to talk about today is that it'll be the engulfing candle setup. As I said, 2 o'clock London time, you can register a QR code or on the website, and you're very welcome to join us. Okay. All right, let's start looking at our main stuff. So I appreciate that if you are new to trading or new to the Monday Market Update, okay, this might look maybe a little bit overwhelming or intimidating. All it is it's snippets from my own model, my STAM model, where I'm looking for strength, trend, and momentum. It's the pieces of what I do at the weekend myself, in create my own work to be able to identify where is the strength and where is the weakness within primarily FX markets, but also indices and commodities markets, in an effort to help me focus my time, energy, and resources for the week ahead. So, what's this telling us? How can we use this for our own? Well, here we are, ladies and gentlemen. We are into week 4 of the year. Where's the strength? Where's the weakness? No surprise that we see US dollar remains top of the pile there. Okay, in terms of its strength. It's weakened a little bit, sort of Friday and today. Not a surprise. There's probably people just taking a bit of a pause because, of course, not only do we have MLK, Martin Luther King Day, okay, as a public holiday for the US, but probably more people are interested in it is the inauguration of Mr. Trump later on today. So I suspect that the world and his wife is going to be watching that just to see what kind of shenanigans go on today, but also increasingly to see what, if any, executive orders he actually writes here on the first day, because invariably there's been a lot of focus and attention on that. But up to today, US dollar remains top of the pile, okay? And I think what will happen is over the next couple of weeks is we'll get an indication of whether that was to change. I personally don't see anything there, to cause it to change at the moment. But as I said, we are living in interesting times. Okay, so we'll just watch that and we'll look at the chart of that in a moment. Joining him, okay, or in top of the pile is Japanese yen. You've often heard me refer over the last few months. Japanese yen has been like Mark Carney, who was referred to as the unreliable boyfriend when he was the head of Bank of England. Japanese yen over the last few months has kind of been a little bit of an unreliable boyfriend as well, in terms of will they, won't they, in terms of their trajectory for their own policies. But we are we're second in the STAM pile at the moment, and we'll look at yen later on in the session. A lot of that is to do with, of course, at the end of this week, we have the Japanese and their policy, Bank of Japan and their policy rate. Most people are expecting them to raise it from 0.25% to 0.5%. So Not, it might not sound terribly exciting, but in terms of A, Japanese policy, and B, their trajectory compared to the rest of the, let's say, the sort of G7 nations, they're going in an opposite trajectory, and invariably that has contributed, with other things, to the sort of strength that we see in the Japanese yen. At the other bottom of the pile, well, we see, Kiwi dollar and Aussie dollar, all right, remain at the bottom of the pile as they have done for the last few months, as you can see. Would we better change on that? Well, as I always say about the STAM, if you're at the top of the pile, the only way is down. If you're at the bottom of the pile, the only way is up. I think any kind of relief rally for Aussie and Kiwi will come at the expense of, of dollar strength. Okay, nothing that the Aussies or the Kiwis are doing, more about what's going on with the US dollar, and we'll have a look at that, as said, in a particular moment. With that, we see Swiss franc, okay, remains in third place. Now, I think I said this last week. If you normally had dollar, Swiss franc, and Japanese yen as the strongest currencies, you'd be looking at that as almost like a kind of a risk-off sentiment there. Okay, that's what most people would associate that with. But certainly, if you look at here for the since the markets opened sort of last night or kind of Pacific morning, well, actually, what we have seen is that that's kind of more of a risk-on mentality there. I would suggest since we've come, but that might just be a reflection of people's a bit of giddiness today. Okay, as they wait to see what kind of pantomime we can expect. Closer to home, all right, once again, and no surprise here, sterling has taken another kind of a move down the STAM. As I said, when you're at the top, the only way is down, all right, and certainly for sterling, the only way remains down. There was let's say, I'm thinking of the words straws and clutching when I look at some of the government news releases after the sort of the big news that we had, the economic releases we had out of the UK. And also, I think the IMF have come out with one of their always accurate projections that actually the UK's GDP will be 0.1% higher than they expected. And of course, everybody, the present government have been jumping on that as if that's some sort of reason for a party. That probably, as I said, just shows you how much they are clutching at straws. Sterling has been short all year, okay, and I talked about this, how we could see 2nd of January, first day back, sterling got dumped across the board. What we are seeing is, of course, STAM and Reeves are at Davos this week, and this kind of is, it's kind of an interesting juxtaposition. Is that the right word? You can tell me if I'm wrong, but we are. I think what we're going to see is we are going to see that kind of a difference. We're going to have Davos world versus Trump world. Starmer and Reeves are at Davos world. Starmer himself has come out, said he prefers Davos to Westminster. That tells you all you need to know about the man. But they are there probably with the begging cap in begging bowl out. All right, looking for any glimmer of hope, whereas the rest of the world will be focused on Trump in the US. And I think, as I said, I think that's the world we're going to be in, and that in itself will have an impact on sterling. Okay, as certainly as a kind of a, I would say our political systems are now a kind of a direct opposite, and of course that will just lead to opportunity for us as traders, and ultimately that's all we're interested in. Certainly, when I look at the individual currencies on the STAM, all right, the sterling ones, they're all selling. Interestingly, what we are seeing is starting to see a little bit of buying pressure in euro. Okay, Aussie and Swiss franc, they're still Aussie and Kiwi, they still remain on the selling side. No shocker there. When I'm looking at indices and commodities, a little bit of a pause. We'll look at the charts in a moment. All right. Certainly, last week was a good week. Remember, those of you who joined us last week, we talked an awful lot about the not only the US data that was coming out, but more importantly, probably the amount of earnings calls, in particular for banks and financial companies, which we looked at last week. They were all pretty much very, very positive, and that is reflected not only in the bank stocks, but also in XLF, which we looked at, and also in those major indices. So it only remains the Russell, which is tactically short, and the Nikkei was tactically short, which I think that's not a massive surprise when we've had yen strengthening. And as I said, I think maybe that we will get a bit more clarity on that at the end of the week when we see what the Bank of Japan have got to say for themselves. FTSE is not, okay, FTSE is not strategic buy, even though we're going to look at the chart in a moment, but oil remains strategic buy, gold remains a strategic buy. The VIX is low, okay, VIX is low and bullish, all right, and that is a reflection of the kind of the giddiness that we have seen come in over the last few days. And of course, we're all fascinated to see is that going to carry on even just this week once Mr. Trump gets his hands on the levers of power and what he actually looks to see. So no massive change overall on the FX STAM, but of course, it could all change by the end of this week based upon what the Bank of Japan do, but also more importantly what Mr. Trump has to say for himself and what he decides to do in the US. So it is a case of making sure you are on top of the news flow this week. Make sure you're as always managing risk and keep your powder dry for the best opportunities. Okay, so that's then. Let's have a look at some charts of interest. So we'll just switch across to that now. Okay, so what I look to do is put up just a couple of charts of interest. I do not consider myself an equity specialist, but we're all traders, we're all analysts, we all love looking at a chart, and there's always something we can learn or something we can see that adds to our watch list. Not unsurprisingly, okay, on the Trump inauguration day, we might have a quick look at DGT, which is his Trump's media and technology company. This is the weekly chart, okay? It's a weekly chart, and you find that my charts are very simple, okay? A blue 20 period moving average, a red 50 period moving average, a green 200 period moving average, and then you might see fractals and inside bars. Very simple, nothing really extravagant about that. This is more about the story it's telling us, okay? And this stock DGT has basically sort of given us it's given us greater entertainment in terms of it reflecting his roller coaster ride in the polls in the run up to into the election. What is, of course, supposedly of interest here as gay as last week is that we had a little bit of a pump there, and we're sort of here we are around about $40. All right, so I'm interested to use that as a datum. This is the days coming in. All right, we're looking at 40. What's the story going to be? Okay, in terms of the way he's going to operate, what he's going to do, how will that have an impact on this particular stock? It's not something I trade. It's not something I'm looking to buy, but I do find it a fascinating chart to look at to reflect upon his own sentiment and his particular standing. But of course, whilst people might look at that, they've kind of really lost interest in that because when we compare it to his little escapade, is that the right word, at the weekend, where he released his own MemeCoin, all right, on Saturday, and then his wife Melania, she released hers on the Sunday. So that was quite some move. So depending upon how you look at it, depending upon the numbers, and there are people far smarter than me who can do the fundamental analysis on that. He probably bumped his own personal worth somewhere between $50 to $70 billion over the weekend, and his detractors would probably say that this is just a reflection of the end of society, that we are working our way towards. Okay, the fact that he's just literally just looked out for himself there and basically just pumped his own meme coin in an effort to fill his coffers. All right, now which is quite some fascinating move, and I will be fascinated to see what comes of this over the next few days, weeks, months, years, etc. But it rallied itself exceptionally hard over Saturday, Sunday. You can see this is a 2-hour chart. Sorry, this is just a 2-hour chart because it's only been going for a couple of days. But you can see that you can probably see that huge, big bearish engulfing key reversal candle. I think that was when his wife released, Melania. She released her own meme coin, and invariably the kind of the price it kind of halved in about 15 minutes there. But you can see it's kind of it rallied its way back up, and here we are. Okay, around about $53 and stuff. And as I said, whether you love or loathe him, or whether you love or loathe crypto, okay, you can't not take an interest in terms of how this is playing out, and what it actually says about the kind of the wider picture in terms of his kind of his what his administration is going to be like, but B, the kind of the larger digital asset cryptocurrency ecosystems. All right, everybody's long Bitcoin is hoping that basically he's going to effectively work his way to recognizing crypto and allowing it to have a kind of wider exposure, and so everybody's going to be keen as mustard to look and see how this plays out. One stock one stock here that is got an earnings call, all right, and there's quite a few this week. I wouldn't suggest that huge names. There's quite a bit of quite a couple of financial companies, all right, kind of a few aviation companies which I normally like to look at, but of course this is Netflix, and this is the weekly chart. This is what I normally like to look at, and you can see, to be fair, all right, okay, Netflix did really well during lockdown, 4 or 5 years ago, no surprise, but then actually it came off its highs when invariably everybody decided to go outside and play instead of being locked in watching Netflix. And then invariably there was a great deal of how would you describe it? A bit of ire, a bit of people being upset when basically Netflix came out and said that they were tightening up on people's usage of Netflix, and invariably everybody had to have their own account rather than you getting an account and then sharing it with your friends, your families, your cousins, everybody. And a lot of people thought that might be the end of Netflix, but to be fair, you can see from this particular chart that invariably it has not done them any harm whatsoever. As I say to new traders, new investors, what you want to do is, a good trend leaps off the chart at you. All right, you don't need to force it, you don't need to push it. Good trend leaps off the chart at you. The challenge we have is that really instruments tend to only trend 20 to 30% of the time. If you're a new trader, new investor, this is the kind of thing you want to be, looking at. Nice long-term trend, respecting the moving averages, higher highs, higher lows. Your job isn't to sort of just find the exact start of it at the bottom, and get out of the exact top. Your job is just to take a piece of it, okay? And as you improve in your skills and your confidence and your experience, your ability to take a piece of it, will extend and grow. But what we're looking for here is just invariably a case of this has been a nice trend for a good while. When I do start to get interested is, when I see sort of kind of big bullish engulfing domino candles, all right, after a long uptrend, I start to get a little bit nervous. I also start to get a bit nervous when we see price really kind of start to go vertical and pull away from the moving averages. For me, that's normally the kind of the exhaustion part of a trend, and we can see that actually we put ourselves in there. You might look at that as a bit of a triple top, a bit of a double top, depending upon your perspective. But you can see at the start of this year we've kind of pulled back a little bit. Now, invariably, what we'll have to see is that will those numbers? I think it's later mid this week. Will those numbers give it the pump back up to the sort of the recent highs? All right, which lots of people will be looking for, and that's an opportunity. Or will it basically take the wind out of the sails? In which case, I would be looking to see, how does it react to that 20-period moving average? Because we can see that it has provided really, nice support, okay, in many ways over the last sort of 18 months. So we're getting, I think, to a decision point, all right, in terms of, do we push on or do we roll over? And I think the news, this week could be the catalyst of it. So you might want to add that to your watch list just to take a look at, see how that plays out. And then the final chart of interest before we switch across to the live markets. This is the UK 100. This is FTSE 100, okay, on the weekly chart. I've not been terribly complimentary about FTSE, and as those of you who have joined me every week will have seen my market updates, compared to the DAX and the US indexes, FTSE really hasn't done a great deal, and you've heard me talking about how I felt, for really, for most of the last 9-10 months, we were just really in a range there between 8,100 and 8,400. Now, if you're a range-bound trader, short-term swing range-bound trader, that's been a beauty. But what we got last week, okay, is we got a pump out, right, and we finally got a break out of that kind of range and a close. And as I said earlier on, the incumbent government, okay, were leaping on that as some sort of form of a pat on the back for them in terms of, it was backing their economic policies. I personally don't see that. I see what it is as a case of the FTSE 100 is a case of is predominantly not a real good reflection of the UK economy at the moment. The FTSE 250 is, and maybe we'll have a look at that at another time. But invariably, the FTSE 100 is, most of those companies there are global companies who make their profits overseas. So invariably, the weaker sterling becomes the sort of the better the numbers for those incumbents within the FTSE 100 will be in terms of their profits, etc. And so that's what we are seeing. There's also a case of a little bit of, I think, just overall giddiness. That as I say, whether you love them or loathe them, there is an element of optimism, okay, being brought in with Mr. Trump, and that kind of rising tide floats all boats. So I'm interested to see if we hold. I'll be interested to see if we come back and test 8,400 before moving on there. That's what I'd be looking for. That's my kind of scenario I'll be watching to see how that particularly plays out. But I certainly don't think it's anything to do with anything that Mr. Starmer and Mr. Reeves have done in terms of the overall economy. Okay, so there we go. That's the charts of interest. Let's switch across to the live markets now, have a look at what's going on. So if you'll just bear with me a second, I'm just going to switch across to my live chart. So as I said, just bear with us a second and we'll do that, okay? Right. Here we go. Okay, so I hope that you can still hear me. I'm hoping that you can see the charts. These is just one of my indices and commodities profiles here. So I have the Dow on the weekly, the Nasdaq, the S&P 500, the Russell, FTSE 100, the Nikkei, the DAX, and oil there as well. Okay, so listen, we've already looked at FTSE, but what we are interested in is, we talked about it last week, is that we had been in a great trend, okay, across those US indexes, and we were having a little bit of a pullback, and we were trying to work out, is this a reverse? Is this a retrace? Is this just merely, a bull flag in a continuation trend? And looking for some clarity on that. I would suggest, okay, as you can see here on the Dow, we printed there a bullish engulfing key reversal candle. You very rarely get key reversal candles as part of a pullback on a trend. Okay, so that I'm taking a note of. Why is it a key reversal? Because price pushed to a new low, but actually rallied stronger and it closed higher than the previous week's high, etc. So that is that's bullish. And the others were momentum reversal candles last week. Okay, you can see them here, right? But giving us an indication that either bouncing off the 20, all right, bouncing off the 20, bouncing off the 50, etc. So a little bit of bullishness. Now, of course, as I said, we might have to wait and see what Mr. Trump's got to say of today in the next couple of days, whether that, as I said, maintains the kind of strong moves, okay, in the stock market. I personally can't think that he's going to want to say or do anything that basically rug pulls the overall US markets, US indexes. I don't personally see that, but there are perhaps bigger forces at play at the moment. So I would be just watching to see how that plays out over the next week. Okay, my scenario would be we are still in an uptrend. This is that pullback, okay, has ended, and I'll be waiting to see do we get the follow through, because that follow through is what we're looking to get a piece of. As I said, we've already looked at FTSE. This is the Nikkei. You hear me like a broken record going on about me watching to see if this is like a head and shoulders pattern that is basically building. And once again, as I said, you hear basically, the 50 period moving average here has just been holding up. And last week, we printed, it's a 3-bar reversal. It's a bullish pin bar, bullish 50 MAB, okay, sort of moving average bounce at the moment. So I'm going to wait to see, does that play? Does that actually give us another little bit of a move over? Or does the Bank of Japan do something that basically, rug pulls at the end of the week and has us rolling over? It's going to, as I said, it's a kind of an interesting week, not just for the US, but for the world in general. And that's what we're looking at. But, as I said, at the moment, that is a bullish pin bar off the 50 period moving average, and that 50 has so far acted as real dynamic support. So, I'll be keeping an eye on that. Close to home, DAX, bang, look at that. DAX blowing its way through there, blowing its way through, closing at all-time highs, etc. Regardless, as you hear me say, regardless of what you think about the political or economic situation in Germany, the DAX has just continued to grind its way higher and higher and higher. And as I try and tell you traders, investors, when there's a trend in there, why would you fight it? Okay, why would you fight it? We spoke about it at the end of last year how 20,000 had been a bit of a support, and it has been, and it's just powered its way higher. And that's as I said, why would you particularly fight that? Let's have a quick look at gold. We'll have a quick couple of commodities. Look at dollar, look at yen, look at sterling. Gold weekly chart. Just towards the end of last year, I was intrigued to see, we had created a lower high here, which was also a pin bar. I thought we might have a ski jump, but it could not break the 20. See how the 20-period moving average acting as dynamic support. We couldn't break that, which was starting to give me the kind of hint that we were not ready to roll over. And you can see that we've just created that triangle, we've broken out of it, and we're nudging our way higher. I think a lot of this is going to be to do with, for once again, Trump's policies and the route of the dollar. Okay, and I think those two are going to be the major elements. And maybe this becomes a false breakout and we roll over, but at the moment it continues to be, a bullish trend. If I go down to the daily chart, all right, that has been, there you go. You've had a month there really of daily, of bullish moves. If I go down to the 4-hour chart, okay, it has continued to move, and this kind of zone, the 50-20 zone has acted as kind of nice support so far. So, it's been trending north, okay, and that's, as I said, don't fight it when it's there. Look at silver, and we talked about silver. Silver to me is, it's between the weekly 20, the weekly 50. We talked about how it double bottomed here, back above 30. It's holding above $30. If I go down to the daily, it's holding above $30. But as I said last week, the price action doesn't particularly sort of, entice me. But I'm looking here. I've got price, the 200, the $30, the 50-period moving average, the 20. All wrapped up together. We're pivoting around 30, and normally, as I often say, when we see all the price and all the moving averages, coalesce together, it's the calm before the storm. It's like, you hear me talking about like trying to push two north ends of magnets together. Okay, they just repel, and it's a bit like when price and moving averages are all wrapped up. It is the calm before the storm. So, as I said, you might want to add that to your watch list to see how that plays out over the next week or month or so. All right, so. Let us have a look as a kind of indices commodities. Let's have a look at the dollar. As I said, we're probably going to overrun just a couple of minutes. I apologize. As I said, I'm always trying to push in as much as I can get through to share with you there. But we'll have a quick look at dollar, yen, and sterling and stuff as soon as my charts decide to play. Okay, this is my dollar profile. Weekly Aussie dollar, Kiwi dollar, Euro dollar, dollar Canadian, pound against dollar, dollar Swiss franc, dollar yen, dollar index. Okay, and that's how I have them there, just to give me a snapshot. Is the dollar weak or strong? Well, I think we all know the story to that. This is the weekly chart of the dollar index. The dollar has been very, very strong. And last week we touched 110, and we talked about it this time last week. But you can see that's a little bit of an indecision candle there, isn't it? That's not really a shock, is it, going into Trump's inauguration, that people might be just taking profits, trimming their positions, just going a bit hands off until we see what he's got to say for himself. Go down to the daily chart. As I said, we pinned it really nicely. Pin bar, false breakout, evening star, came back, but once again, the 20 is holding. See how that 20 is holding for the moment. The last few days on the 4-hour chart, I wouldn't exactly say that is terribly pretty after we bounced off it on that 110, but that's not a shock. There is just basically, that's people going sideways or trimming positions until we get some clarity. That shouldn't really be a shock to people, to traders. Where do we see it? Well, you're still seeing this in terms of, dollar strength, Aussie weakness. All right, dollar strength, Kiwi weakness. Okay, dollar strength, Canadian dollar weakness, dollar strength, Swiss franc, okay. Dollar yen, we're going to look at in a moment, dollar and pound against dollar. Euro dollar, okay, is doing the same. Last week, it was a little bit of what I would call a high wave candle here, bit of indecision, bit of just basically waiting to see. Yep, we've had a little bit of a move up. to start this week, but listen, we're a few hours into the week. Okay, things could change drastically, and undoubtedly, I think they will. So dollar remains strong. We're all waiting to see, does he do anything or say anything that basically either juices the dollar returns or basically pulls the wind out of its sails. All right, so here now is a Japanese yen. Okay, Japanese yen daily chart. Remember what I was saying? The fact that Japanese yen has shifted its way up to number 2 in the STAM, its strength. Okay, and of course we've got that Bank of Japan meeting at the end of the week, so everybody's going to be taking an interest in that. If we look at it, right, pound against Japanese yen this year, no surprise. Sterling weakness, yen strength. Even over the last week, look at dollar. Dollar has weakened against Japanese yen. Euro yen, okay, that has weakened. All right, euro has weakened against Japanese yen. Look at Aussie yen, no surprise there. Aussie's weakened against Japanese yen. Look at Kiwi yen, all right. Kiwi has weakened against Japanese yen. CAD, okay, CAD has weakened against Japanese yen, okay. Swiss franc even, all right. Swiss franc against Japanese yen. Remember, Swiss franc's in the 3rd place. We can see, all right, yen has been slowly strengthening in 2025. Is that going to continue after Friday? Well, we'll have to wait and see, okay. I think most people are banking or expecting a 0.25% interest rate rise on Friday. But as I said right at the start, Japanese have been the unreliable boyfriend. Those plans could change based upon what Trump says over the next 2 to 3 days. Okay, he could completely blow the Japanese Bank of Japan's plan out of the window if he comes out and does something quite radical. So yes, Japanese yen has been strengthened. Yes, there will undoubtedly be some intraday and very short-term swing trades, but I think we'll be waiting to see what Trump has to say and how the Bank of Japan interprets that and what they plan to do. And so we will have to wait to see with that on Friday. Okay, last one as always. We always finish on look to finish on sterling here. Okay, so we can have a look. I appreciate we're overrun a little bit. Listen, pound against dollar. All right, sterling weakness, dollar strength. That isn't really a massive shock. Okay, yep, a bit of indecision last week, but for reasons we've just discussed. As we said, pound has also weakened against the Japanese yen. Also, even a pound has weakened against New Zealand dollar. The pound has weakened against the Aussie dollar. Pound has weakened against Canadian dollar. And remember, Aussie, Canadian, and Kiwi, those condols, have been the weakest at the STAM, and yet even they have strengthened against sterling. And as I was saying, that is what is one of the big things that I think has helped pump FTSE to those levels. Even when we look at euro sterling, okay, euro's not exactly been a bundle of laughs in terms of trading opportunities, and certainly this weekly chart has shown us that we had that euro weakness, sterling strength, but we talked about it at the time. Here we had this bullish key reversal candle at the end of a downtrend at 8,300. We sort of went sideways over Christmas, but then you can see that even the euro there. Now, last week we closed underneath the 50, and as I've said all along, we can see that the 50 has acted as pretty good dynamic resistance there, isn't it? Now, of course, I know this week we've started trading above it, but we're only half a day into it. There's a long way to go. But clearly, invariably, that has just been a representation of that, sterling strength more so than I'd say euro weakness. All right, euro strength. Okay, is it's more about sterling weakness. Okay, so and if I go down to the daily chart, we did maneuver around the 200 period moving average, okay, equivalent to the weekly 50. But as you can see, okay, we continue to have that sterling weakness. And the question is, what could change that sterling weakness? The reality is STAM and Rees, they're not going to go back on their budget or their plans, okay? If anything, what they're likely to do, I think, is they're more likely to double down on it because they lack any kind of real political acumen or savviness. And invariably what will happen is there'll be an emergency budget or more taxes, etc. I think that's my own personal view. But Trump's in town, everything could change, couldn't it? So anyway, let's draw it to a close there, ladies and gentlemen. I apologise we overran a little bit, but and I appreciate we fly through this, okay? As I say, I am trying to just share with you as much as I possibly can in the time allocated. I hope you found it a bit helpful. I hope it gives you a little bit of insight. I hope it helps you for your week ahead. As I said, if if you want more, I'll be doing Monday Market Matters webinar at 2 o'clock for active trades. Okay. If you're on the VTP, there'll be the stage 1 call tonight, stage 2 call tomorrow. For everybody else, I hope you have a really good week. As I said at the start, I think there'll be a few swings, a few change, some volatility. So make sure you're managing risk and keep your powder dry for the best opportunities. Have a fabulous trading week, everybody, and I will speak to you soon. Cheers.